Tuesday morning here. London time, so what is it, 8:30. Had a look at the charts this morning. Seems like we could get something shaping up in London, potentially in the next, say, half an hour to an hour. So the time I get to work and then have a quick scan on the charts, there could be a setup for me to get involved in. Not quite sure yet, but potential. Just waiting on US dollar, Swiss franc to just confirm a break of structure with momentum, and also EU to do the same but in the opposite direction. So I'm looking for shorts on US dollar, Swiss franc, and longs on Euro, US dollar. Don't you just hate it when someone's on the side of the road waiting to pull out? They're waiting. Okay, they're waiting for me to go, and then they decide to go when you're as close as possible to them. Anyway, yeah, so looking for US dollar, Swiss franc shorts, EU longs for now. That's what it's looking like. It could shape up to be today. No trades so far this week. So yeah, see what the markets have in store when I get back onto the computer. Just want to touch on today, I'm seeing a fair bit of beginners trying to nail the M1 time frame for entries. Now, I'm not saying it can't be done. Of course it can be done, anything can be done. But if you're a beginner, this is, say, your first year trading the financial markets, trying to nail the M1 time frame, the 1 minute time frame, is going to be such a headache. And also going for these extreme risk to rewards. So I'm seeing people do 2.5, 3 pip stops, and they're trying to get 7 to 1s, 8 to 1s. Now I know it can be done. There's people that do that successfully. I'm quite aware. But they've probably been trading the financial markets for 5, 7, 10 years, and they understand price a lot more than someone who's just entered, someone who's beginning trading the financial markets. Now, what I would suggest to these beginners trying to trade the M1 is stop first and go up a few time frames for your entries. So your 5s, your 5 minute, your 15 minute. Now, what this is going to do, this is going to limit the amount of entries you see, for one, so you're not going to be overwhelmed, because on the M1 you're going to see, I don't know, maybe 5 setups a day potentially forming on the M1. Now, not all of them are going to work, so let's say you're risking 1% and you take all 5 of those setups because they fit your plan. Your risk for that day is 5% of your account, and you could easily lose all 5 of those trades. Now, do you want to be 5% down on one day? I don't think so. So if you go up a few time frames, 5 minute, 15 minute for entries, this is going to significantly reduce the amount of entries you see in the day, and therefore reduce the amount of losses you could potentially take. Also, along with the M1 time frame, I'm seeing these beginners, they're just taking entries on every M1 order block they see. They've just marked out all the M1 order blocks, and then if price has a reaction at the order block, then they get involved. Now, this is gonna cause a lot of bad habits, because I don't know how many M1 order blocks form in a day, but that is going to be a lot of potential trades you're going to be taking, and therefore exposing your account to a lot of risk in just one day. Now, when I talk about this, it reminds me of something I heard from Trader Dante. If you haven't checked out his videos, I would highly recommend, especially if you're a beginner. He tells it how it is. He tells you're not gonna, well, yeah, just go check out his videos and see for yourself. But I always have what he tells people in the back of my head, that the market is constantly trying to get you to enter. So if you have an edge, the market is always trying to advertise an entry for you. For example, yesterday I had a perfect entry on EU for a short, but because one thing that I saw being equal highs above where my stop would be invalidated the trade, that means no trade for the day. And you need set rules like this to stop you getting involved in the markets all the time. And yeah, so that you just need to understand that the market is constantly trying to advertise for you to get involved. And this is where people go wrong. They think that they need to get involved in every single thing that they see that could potentially work, where you need a set of strict rules to stop you getting involved in the markets all the time. And this is going to help you massively going forwards. And you really got to think long term when you're starting out. Yes, your account's going to be small unless you've had a business and you've done well and you want to diversify, etc. I don't know, but let's talk about someone who's got a small account. Your gains are going to be rubbish when you make 1, 2, 3% in a week. You're going to look at that and say, God, like all of that work, all that time analysing, all that time spending studying, and I've made 30 quid. What a waste. So you're going to try and shoot for these ridiculous R multiples, 7, 8, 10R. Now I know it can be done, like I said, but that's for the more experienced trader. If you're beginning, why not nail down a 1 to 2, a 1 to 3, get profitable first. That's the main thing. That's what you're trying to become. Yes, you're trying to become profitable in the markets, and you should do that by any means possible. If you're unprofitable and you're not changing anything, then you're just going to stay unprofitable. So nail down a 1 to 2, 1 to 3, have a bigger stop loss, give yourself more room for error. Don't shoot for the moon. And then once you're profitable, once you've nailed down the 1 to 2s, 1 to 3s, then go into your data, go into your model, and maybe you can then reduce the risk to reward. I mean, reduce your risk so your reward's bigger, and therefore increase your R multiple that way. But to think you're going to start out and nail these massive 1 to 10 trades as soon as you start trading, I think is a bit of a fantasy. Yes, there's going to be some anomalies, there's going to be some outliers that actually come into the markets and nail the M1 time frame, but as a whole, the majority of people aren't going to be able to do that. The biggest trader on FTMO, the most profitable trader that's been funded by FTMO, I think his name's Bernard or something. He only trades the daily time frame, and he's had the most payouts from FTMO, trading the entries using the daily time frame. And then you've got beginners coming in just trying to trade the M1, thinking that that's going to make them the big money. It's a lot of fantasies over here in the trading industry, that the M1 timeframes, when they catch this 1 to 10, that's all they need. But let me tell you from experience, I've been there. I was catching those 1 to 10s, even more. I've had trades that have gone to 1 to 50. Yes, that's after partials have been taken, but that is when you're hunting for these opportunities that are just going to give you these massive returns, massive R multiples, that's not what's going to get you to become profitable. It could do after you've been profitable, then you refine your edge, then you refine your entry model and your strategy to catch these bigger moves. But your first step is just to find a system that gets you profitable. If you need a massive stop loss, 1 to 1, make a 1 to 1 work, make 1 to 2s. They're, I don't want to say easy to catch, but they're not difficult to get a model that gives you a 1 to 2 risk to reward using the higher time frame than the M1, 15 minute, 30 minute, 1 hour. There's going to be loads of opportunities as well. You think there's going to be not many because you're trading a higher time frame, but go and test it. Go and test this theory and see for yourself. There's, like, if you really think about it, if you're trading 4 pairs like myself and your model gives you around 3 trades a week, let's say 3 trades a week it gives you, and on average, let's just say a 2R, okay, and 2 of those winners, 1 losers, that's 4R for the week, okay? 4R in a week. You do that for the month, that's 16R. Yeah, 16R in a month. Like, that is a ridiculous return, and people are trying to shoot for that in 1 trade. And you got to think longer term when you're starting out. Treat your account like it is quarter of a million, $500,000 account. Would you be really trading your account as recklessly as you are if you had 5 to 10k on 1 trade? I don't think so. You would not be risking 5k to make a 50k return. You would definitely be taking profit before you get to that 50k. Just because you've got a small account, you're trying to grow it as fast as possible, you think hitting those big R multiples is going to be the way. And I'll tell you, for the majority of people, that is not the case. So if that's you, try and go up a few time frames, take less trades. This is what worked for me. Take less trades, which therefore will improve your strike rate and your win rate, and also your psychology, because you won't be taking loads of losers. And yeah, I could go on about this for a while, and I'll touch on it again in the future about my experience trading the M1, having these ups and downs, but never consistency. But yeah, I hope you all have a good day, and we'll see what the markets give us today. If I do get into a trade later on, then I will be sure to show you that on the charts a bit later. All right, peace out. Have a good day.
Right, we're back on the charts. This is what's happened today. So let me just go back in time, and we will talk through the entry. Okay, so let's just go on to the daily. So this is what I have on the daily. Let's just work off the previous day. Well, I've been bullish on GU, which is ranging sideways. Daily's making high lows. I do expect us to sort of come into these levels, potentially take out this high. But as for the intraday, this is yesterday's This is yesterday's daily candle. It's on here. So strong bullish daily close, and I was just playing a continuation bullish. Also have this pattern 1, 2, and this is coming up to the 5th touch. So you got your 1, 2, 3, 4, and 5. So now this pattern's been complete, and we could potentially see a sell-off from here, but we just played this small run up here. Okay, so if I go down to the 15-minute time frame, which we execute on, well, I execute on. Okay, so this is this morning's price action. Let me go back a bit further. So we're here. Okay, so this was London. Let me just put on the sessions. Actually, no, I don't really like that. It makes the screen too small. Okay, so this is London. This is your Asia range. So we've taken Asia low, and then we've popped up, broke structure here on the 15-minute. 2 clean candles closed above the structure break, showing bullish momentum, and we left this imbalance here. Okay, so if I just go forward a few bars, this is when we began to see the pullback, I believe. Yep, so when this candle was coming down, I drew my fib from the bottom to the top, set my order at 0.618, stop at the lows, target. First target was 2R, second target 3R, 50% at the first target, 50% at the second. So total 2.5R. Okay, so if I play price forward, we actually came into my level. This didn't tag me in. I thought this was gonna be mean, and it missed my entry here by 0.3 pips, and then luckily, I guess, price did actually come back down into the area where I wanted to, well, where I had my limit set. Filled this imbalance, and we also had this order block, I guess you could call it here, which price came into around 12.30, and I just played price forward. You see we had a nice pop up, 50% of the volume was taken off here, and then 50% of the volume was taken off here. So in total, that was a 2.5R win. So all good. Fit my bullish bias on GU, and as I said earlier, I've been bearish on the DXY this week, so longs on GU EU were more favourable. And yeah, this one, it's one of the trades that played out in the edge, and well, we move on to the next. As you can see, this trade looks pretty much identical to other trades that I've broken down, because that's what we do, just execute on exactly the same entries every time. Nice and simple. And yeah, all good. Catch you in the next one.